Hello everyone and welcome to Day Trader S&P 500. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top ranked stock market timers. And while I bring my 30 plus years of trading experience to the channel, we just recently started our short-term service, which is basically day trades in 2018. You can see our track record there, and make a lot of trades a day, sometimes 20, 30 trades a day, scalping, average over 700 trades a year. So if you guys don't want to sit around in front of your monitor all day like I do, you can always contact Striker Securities, and they will auto trade our signals for you. So while we've been around for a long time, relatively new to YouTube, so we appreciate if you guys hit that subscribe button, the reminder bell, and also the like button. We appreciate you supporting our channel. So we have a lot that happened since the last time we spoke on the S&P last week, and just as a refresher, we had our Fibonacci spiral chart here, and the market was moving within 1 day, a slippage of 1 day of our time targets as far as days are concerned from the September 2nd all-time high. A reminder here, we had the 9/11 low, which was within 1 day of the 8-day Fibonacci sequence, followed by the 9/16 high, which was within 1 day of the 13-day turn period, and then the 9/24 low, which again had a slippage of plus 1 day. And we looked for the next turning point on October 6th. And on that day or the next day, it went right up there, and I think it eclipsed this high by 3 points maybe, if I recall correctly. And then since then, the last 3 days of last week, it continued higher. So one of two things is going on. Either this has a slippage of plus 3 days and it topped on Friday the 9th. That would mean the market would have to go down starting Monday and continue down for basically 3 weeks into this 55-day spiral, or it's already served its purpose and it caught these turning points, these first three, to within a day, and it's done. We'll find out real soon. Okay, so what to update this here from we'll look at our chart, and this is a daily chart of the S&P, but this shows a little better the 2 hour, and we can get from that all-time high on September the 16th, and we had this first move down, and we were looking for a wave that was equal to or 1.618 multiple. So you can see there we were looking for, it was actually 3148, but instead the market stopped, strangely enough, on the Fibonacci 786, which is usually a retracement, not a multiple, but I found it extremely interesting that it stopped there. And what makes me think that spiral has run its course is from this low on September 24th, that turn date, this move up looks impulsive. It looks like a new wave up to what will ultimately be a higher high, higher than the all-time high. And if we look at the chart here, again, this is a daily, this is the March lows, this is the September 2nd high, this is at reversal, key reversal, island reversal in June. But it's interesting that this correction here, we're at bottomed, if you remember, on the 786. Let's do a little retracement from that low after what we thought was 4 at the time, and that decline was a near perfect 618 retracement of this move up. What does all this mean? Okay, let's put it all together for you, and we'll get out our Fibonacci wave pattern, our Elliott wave pattern, I'm sorry. So we were thinking this was 1, 2, 3, 4, and 5. However, with this move here, and it still could very well be, what will tell us it's wrong is when this goes above that high. But it really looks more like this right now with the most recent price action. It looks like this is 1 here, this is 2 here, and this is 3 all the way up here. 4 could be even longer and play out more. It could just be, and 4s can be complex, but unless and until this goes above there, we can still allow for that 4 to go lower, and we can still allow for that October 26th or 27th low. Okay, but we also want to look at the price action from this low. Like I said, this looks like impulsive. We can count 5 waves to the up, and let's get some target prices here. If this was the low on the 24th, we can count 5 waves up to here, and we can get extension there. So if this is the 4th wave low from the March 23rd low, we'll get one more 5-wave pattern up to complete wave 5, and then we got to correct everything. Okay, so that would be 1, that would be 2. Here's our targets for 3, 35.15 and 36.34. And you can even see this is another reason why I think this is impulsive, because you can see 1, 2, 3, 4, 5 again, and then a correction, and then 5 again. So we can even, it's all fractal. So these are patterns within patterns, which looks very impulsive. So we can see the 3rd wave starts here, and there's a 5 waves to the up, and then we can see this one looks at a 1.618 at 35.27. So it looks like we're going to break this all-time high, and the S&P will then correct. So we're looking for that 5th wave up here. We'll watch this pattern and see if it does break down, but that looks like a very convenient low, lack of a better word. And we also wanted to look a little bit here with gold. All right, from that March low, and really nothing's changed. It's just that 4th wave looks like it's coming in. We can see from the March lows we have a 1 up, a 2 down, a 3 up, and a 4, which looked like a triangle, but it still looks like a 4. So we can count that 3rd wave up there. Okay, and here is our wave 1 high. Let me draw that Elliott wave pattern for you guys here. Okay, and that would be 1, 2, 3, 4, 5 there. 1, 2, 3, 4 ideally goes to here. It went between the 50 and the 618 retracement, and then we get a 5. So we're still looking at this this 4 cannot violate the 1. Again, 4 here cannot be below the wave 1 high. It shouldn't be. It probably bottomed between the 50% and the 618 retracement. It could still go to there, but our target remains the same, unchanged from our previous video. We think this 4 wave is complete, and this is the initial stages of wave 5 up to new highs. And the same with the S&P. We're looking at the S&P here as having and I'll draw that out too for you guys here real quick. Let's get that 5 wave pattern, because it's from the September 24th low. There's 1, there's a 2, we think 3, and this is for 3, it'll be equal to 1 here, but it's probably more likely 3, then 4, and then 5 to new all-time highs. Once that's complete, the market will correct. We'll get those numbers and do those calculations once the new high is in. Again, thank you everyone. We appreciate you watching our channel. Until next time, take care everyone.